Business time now with Madison Reedy. Madison, you come bearing a survey of a different kind to yesterday's. So this one is consumer confidence. Are we feeling, sparkier?
Well, apparently we actually are coming into the weekend. Yes, this one says so. So consumer confidence rose 3 points in the month of June to a measure of 123. Now, that's actually above the historical average. Now, consumers say that they're feeling more optimistic about the state of their own finances, the size of their own wallets, but also about the state of their country's economy as well. They also feel better about the future of all of those things too. Now, economists say that consumers seem to be defying the odds of a softening housing market and a softening and slowing New Zealand economy. Now, that's probably because they're feeling pretty good about things like low unemployment, so a pretty strong labour market, and also historically low interest rates and mortgage rates at the moment. Now, actually, when you look into the detail, a net 40% of consumers that were spoken to in this survey, they do think that it's a good time to buy a big ticket item, something like a couch or a TV for your house, but that's actually dropped off marginally from the month before, but it is still pretty strong. So economists imagine that that will keep spending up at a pretty good level, which should be good news for business. Now, if you remember yesterday when I spoke to you about business confidence, yet another survey, businesses are actually feeling more pessimistic. Now, in that survey, especially retailers were feeling the most pessimistic among all of the business sectors. Now, that seems to be quite a mismatch, because when you look at consumer confidence, if consumers are saying, look, we feel pretty good at the moment, we're looking to spend a bit more, then you would imagine that businesses, especially retailers, would be feeling pretty good. But
they both can't be right.
Well, one of them has to be wrong. It's a 50-50 here. But regardless, that's not the case. There is this mismatch. And that's probably because of squeezed margins is what economists are putting it down to. So the increased cost of doing business has risen in this country. And they are struggling to pass that on to consumers and making them wear the cost. So they're taking the hit financially, so they say.
Hey, Fonterra, now it's set to pocket off an investment. What's the details of that?
Fonterra, last year in March, it invested in a protein nutrition startup that sold protein shakes online in Europe called Foodspring. Now, today it announced that it's actually looking to sell that, and it's selling it to the United States confectionery giant Mars, which is actually the manufacturer of things like M&Ms, interestingly. Now, Mars has set up its own subsidiary called Mars Edge to try and launch into this whole health and wellness market that is obviously booming at the moment. Now, Fonterra expects to make a gain off the sale of that investment. Even after just having it for about 15 months, they're expecting to pocket $64 million off that. And they do say that they're going to keep supplying their whey protein to Foodspring, but they're also going to eye other opportunities in the wellness market, which they expect to be about worth $200 billion globally. So they're pretty keen to get a slice of that pie.
Yeah, a lot of zeros there. Speaking of which, let's take a quick canter around the markets. What have we got?
No zeros tonight, actually. The NZX Top 50 index closed at another record high. So it closed up 0.7%. That's a rise of 70 points to close at 10,501. The New Zealand dollar, that's buying at just under 67 US cents, 70.1 to the Australian and 52.9 British pence.
Fantastic. Thanks, Madison. Madison Reedy with your business news.